We've added a couple of names, and I could mention things like Marel, which is a food processing company, or Karnoff in Sweden, which is a legal information provider. But broadly, the turnover's down. We've been sitting on a number of stocks we think offer very good value. We've sold out of the more expensive names starting from last year. Now that's starting to come our way in the market in September, having had a very disappointing August where the manufacturing data was very weak. We're hopeful from here, with maybe a little bit of fiscal policy and maybe the end of the sort of trade war, ratcheting down of the trade war, that people will become a little bit more positive and some of these value stocks will start to outperform. We've run with a long list for quite a long time, so there's nothing new. We're used to tracking that number of companies. We want to maintain liquidity, which is important even in a closed-end fund, and on a number of occasions we've been wrong, okay, and we need to be able to get out of a holding. But we will have a sort of formal review process of stocks that stocks that underperform, and we go back and start again with a case and question ourselves, try and be cynical. And sometimes we might find a stock that's relatively more attractive. But you can expect us to run with a relatively long list. In Q2, I mean, look, Germany went into negative growth. Say manufacturing in particular has been very weak. And the sort of so-called trade war between China and the US, well, Europe's been very much caught up in it. And Europe is very correlated to global trade and global GDP. So it's weirdly hurt Europe far more than the US and China. So any ratcheting down of those that trade talks will help. And so I would actually be positive going forward that things will get better from here, not worse.